Your bank has a secret file on you, and based on one number, your average balance, they've already decided how much they'll charge you, what perks you get, and whether they even want you as a customer. Today, I'm pulling back the curtain on the 6 banking tiers and showing you exactly how to move up without needing a raise. Here's something that might make you uncomfortable. Your bank has already put you in a category, not based on your credit score. That's a different system. Based on how much money you keep with them. And that category affects almost everything. Your savings rate? Tier. Your monthly fees? Tier. Whether you get a real human on the phone or sit on hold forever? Tier. Whether you can negotiate a better mortgage rate and save tens of thousands of dollars? Also tier. Banks do not advertise this. They don't put it on their website. They don't train frontline staff to explain it. But talk to people who've worked inside banks, and they'll tell you the same thing. This system is real. It's called relationship pricing, and it's been part of retail banking for a long time. So let's walk through the tiers, starting at the bottom. If your average balance is under $1,000, the bank has a quiet internal label for you. You're a cost center. That means you cost more to service than they make from your deposits, and they make sure you feel that. Monthly maintenance fees, overdraft fees, minimum balance penalties. Here's the brutal truth. At this level, the bank often makes more money from your fees than from actually lending your money. You're not being treated like a valued client. You're being treated like a revenue source. And the trap is built into the system because the fees keep draining the exact balance that could help you escape this tier. Once you get into the $1,000 to $10,000 range, you move into what I'd call the break-even zone. Your fees might get waived if you stay above the minimum. You may get basic credit card offers, maybe a slightly better savings rate. But let's be clear, you still have almost no negotiating power. Quick question. Do you know your bank's actual minimum balance requirement to avoid fees? Most people don't, and that's not an accident. At this level, the bank is willing to keep you, but they still don't really value you. There's a difference. Now we're getting somewhere. Between $10,000 and $50,000, you start becoming what banks consider a profitable customer. And this is where the experience changes. Better rates, proactive outreach, higher credit limits, preferred customer offers. Suddenly, your bank starts acting a lot friendlier. Why? Because now you actually matter to them financially. Your deposits help fund lending. Your balances improve the bank's overall relationship value. You're no longer just sitting in the system. You're producing profit. And here's the big takeaway. At this tier, you can start asking for things. Better CD rates, lower loan rates, fee reversals. Most people never ask. Not because they can't, but because they don't realize they have leverage. Now you do. At $50,000 to $250,000, you enter priority client territory. And this is where banking starts to feel like a completely different product. You may get a dedicated advisor, better service, more flexibility on rates, real mortgage perks. Basically, private banking light. And here's the part most people miss. You do not necessarily need $50,000 in cash to qualify. Your checking account, savings account, brokerage account, IRA, CDs, if they're held at the same institution, they often count together. So, if you've got $20,000 in checking and $40,000 in investments at the same bank, you may already qualify for more than you think. But if you never ask, you'll never know. Call your bank and ask about relationship pricing tiers. Use that exact phrase. You may unlock benefits you should have already been getting. Once you hit $250,000 to $1 million, you're in wealth management territory. Now we're talking about private banking access, concierge support, estate planning conversations, and portfolio-backed lending at rates most people never even hear about. At this level, the bank isn't trying to squeeze you for fees. They're trying to keep you from leaving. Fee waivers become automatic. You get invited to events. You have direct contact with your banker. And here's the irony. The people paying the most fees often get the worst treatment, and the people who need the least help get the best service. That's not a flaw in the system. That is the system. Once you're above $1 million, you're in full private client territory. That means dedicated teams, not just a banker, below market lending, family office style support, access to investment opportunities that most customers never see. Here's what that can look like in real life. A private client can call on a Saturday and get serious attention by Monday. They can borrow against assets at rates that make consumer debt look ridiculous. They get speed, access, and flexibility. Now look, most people watching this are not here yet. And that's okay. The point is not to feel behind. The point is to understand the game, so you can play it smarter from where you are right now. So how do you move up a tier without making more money? Here are 3 moves you can make this week. First, consolidate your accounts. If your checking is at one bank, your savings is somewhere else, and your investments are in a third place, you're splitting your relationship value across multiple institutions. That makes you look smaller everywhere. Bring more of it under one roof, and your total relationship balance can jump fast. Second, ask about relationship bonuses. A lot of banks offer tier benefits when you link checking, savings, credit cards, or investment accounts, but they usually don't advertise it clearly. You have to ask. Third, negotiate from a position of knowledge. Once you understand the tier system exists, your conversation changes. You can say, I know my relationship value may qualify me for better pricing. What can you offer me? That one sentence tells the bank you understand the game, and that changes how they respond. If you want to figure out exactly where you stand, I put together a free banking tier audit checklist and a bank negotiation script, including the exact language to use when you call. They're both free. Link is in the description. If this breakdown helped, like, share, subscribe, and comment your thoughts. I'll see you in the next one.